There's one more transaction worth mentioning if you're not using the GRIR reconciliation monitor. And that's the app based on the GUI transaction MR11, which some of you may already be familiar with. In fact, if you write something off with the GRIR monitor, you'll get the same result as using MR11, but with the monitor you have the various approvals and can review the items one by one. Part of the selection screen of MR11 is shown on the slide. Depending on whether you select the option Prepare List or Automatic Clearance, which are too far down to be shown in the slide, you can either just look at the proposal of items to be cleared, or you can clear them automatically. The slide shows the results of executing the app based on MR11. You can easily see the quantity differences in the screen, and you can select one or more items on the left and click on Post. This will either write off or write back the item from the GRIR account without affecting the stock, so it should only be used where it's appropriate to do so. Usually where it's not possible to do a normal goods receipt correction, frequently after a substantial amount of time has passed since the original transaction. The other side of the entry will go to the same account as the original, where appropriate, or to the price variances account if not possible. The default document type is usually KP. If you want to analyse the posting, you can also use the app based on the GUI transaction MR11 Show. Note that this uses the logistics document number rather than the financial document number, however, but by clicking on the follow-on documents you can get to the financial document. If we look at the purchase document history in the GRIR reconciliation app, you can see that the write-off shows as account maintenance. Accruals and provisions can be made in a number of different ways. Ideally, the bulk of the accruals will be made automatically through the GRIR process. In other words, the balance of the GRIR account will represent the value of the goods and services received that have not been invoiced. There may be a requirement to accrue for items without a purchase order. There are some things such as certain taxes which are not really purchased as such, but which you might want to accrue for, as well as some items which should have been accrued but do not appear on the GRIR due to missing goods receipt, for example. If there's a purchase order but no goods receipt, either due to delays in posting or perhaps it's a service order or something with no goods receipt anyway, S/4HANA also provides an accruals engine, which uses specific rules to pick up additional accruals, for example using planned delivery dates. Prepayments can be posted manually by posting the other side of the payment to the prepayments account if not posted to the supplier account, or using the down payment functionality. With the down payment functionality, although the supplier's account is credited, the GL account for prepayments is substituted instead of a normal reconciliation account linked in the supplier master data. If you want to spread, for example, an annual payment made at the beginning of the year over the periods that it's relevant for, you can also post the payment to a GL account and then use a recurring journal to transfer the relevant amounts to costs each period. If you're posting an accrual manually, you can do it in several ways as well. Let's say you accrue for 3 items, 40 and 60 at the end of period 1, giving a balance of 100, and an additional 55 at the end of period 2. During period 2, if you receive the invoices for the first accruals, you have the option of posting them to the normal account and adjusting the accrual account accordingly, or posting them directly to the accruals account. At the end of period 2, if you haven't already adjusted the accruals, you then have the option of automatically reversing all the accruals and creating a new one, or just posting the delta. The options that you choose to reverse an accrual will probably depend on the way that you post the accrual. If you itemise each accrual when posting, then you might want to clear each item individually as it comes in and create only delta accruals. If you've not itemised the accruals, it might be easier to reverse the whole lot at the end of each period and post new accruals. If you want to reverse everything automatically at the end of the period, you can use the reversing journal template covered in section 5 to enter the accruals. You can also use the standard Post General Journal Entries app for ad hoc entries, or if there's a lot of detail, you might want to use the Excel upload. If you haven't used the reversing template, you can still reverse multiple documents in one go by selecting them by document number, for example, in the Manage Journal Entries app. You could also use a unique document type to make them easier to identify. If you have a similar amount each month, you can use the recurring journal, also covered in section 5. Whereas accruals tend to be based around costs that an organisation has committed to but has not yet been charged with, usually purchases that have not been invoiced, provisions tend to be other costs that are likely to reduce the organisation's overall profit. Some examples are in the slide. In some cases, a more specific provision may be made. For example, if you have a customer that has a large invoice that is in dispute, or you're aware of certain circumstances that may make it difficult for the customer to pay his debts, you can use accounts receivable transactions to repost these invoices to the customer, using a special GL indicator to change from the reconciliation account for debtors to the GL account for bad or doubtful debts. On the other hand, you may want to keep a generic provision equal to a small percentage of the overall sales or outstanding debt permanently in the accounts to represent the most likely amount you may need to write off in the future. In this case, you might treat the posting similar to the accruals posting, either by increase or decreasing the provision each period or year end, or by reversing out the provision and posting a fresh calculation based on the latest information. Depending on the quantity and turnover of stocks, you may want to make provisions for damage or obsolescence. It may also be necessary to create a provision for any fixed assets where the market value has dropped well below the net book value. Depending on the business, there may also be a large amount of sales returns for whatever reason that you want to provide for. And you may also need to provide for one-off events, for example structuring, or a specific legal dispute. Different countries have different types of taxes and ways of reporting. In this section, I'll be talking mainly about the taxes added to sales and purchases, rather than direct taxes such as corporation, income or payroll taxes. In Europe and some other countries, value-added tax, abbreviated to VAT, is included on all taxable transactions during the life of a product. If the cost is 100 and the VAT rate is 20%, then the customer pays the supplier 120 and the supplier pays the 20 to the tax authorities. VAT is included on both purchase and sales invoices. So when the supplier pays the tax part over to the tax authorities, the supplier will deduct or recover any purchase tax that it has had to pay to its suppliers. In other countries, sales tax may be added only on the final product and may be known, for example, as goods and services tax, abbreviated to GST. Organisations with more complicated tax calculations, especially those in countries made up of a number of different states or regions, each with different rules, may use external tax engines for the tax calculations. In S/4HANA, each country is assigned a tax procedure which contains the local rules, and within that, tax codes are created to accommodate the different rates and account assignments. Most sales, purchase and expense documents will be posted with the tax code. Products and services can be taxed at different rates. Items may be only partially taxable, with the non-taxable element going to either the original cost or a non-tax allowable account depending on local legislation. In some cases, particularly within the EU, both input and output tax may be calculated in one tax code, with the purpose of declaring it in both the input and output tax sides of a declaration, either to avoid cross-border profits or for specific areas such as construction. This pushes the recording of both the input and output VAT transaction to either the supplier or the recipient of the goods or services. The net effect is zero, but you may see a debit and credit posting to the VAT account with different tax categories so that the amount can be reported in different boxes in the tax declaration. You may have heard of plants abroad. Where this is implemented, it allows a company code in one country to use tax codes from another country. For example, if a German company code has a warehouse in France. Although the warehouse belongs to the German company code, it may have to register and pay French taxes, for example when goods are shipped directly from the French warehouse to the French customer. SAP's solution to ensure the timely submission of an organisation's global statutory reporting is called Advanced Compliance Reporting, or ACR. As well as generating the submissions in the right format, ACR is able to provide a data preview and verification prior to submission and monitor the status of the submissions, and it also has a number of other useful features. It's especially useful as a requirement to submit declarations electronically is increasing and is regularly updated with the new formats. The overview screen is shown in the slide. If you're not using ACR, there are several other useful apps for taxes which I'll be covering in this tutorial, along with some examples of basic tax reporting in journals. As you cannot post a journal or a payment directly to a VAT account using standard transactions, typically all VAT accounts will be periodically cleared to zero, and the balance is transferred to a control account and sometimes further to a supplier account if the payment to the tax authority is made using the automatic payment program rather than, for example, an automated direct debit. The journal to clear down the GL tax accounts can be automated using the Fiori app based on the GUI transaction S_ALR_87012357, which is also a report. The slide shows the summary part of the Advanced Return for Tax report, which is the easiest way to see the totals of both the sales and purchase tax codes and how much is payable or how much is deductible, as well as the overall total to be paid or claimed in one report. The app, as mentioned, is based on the GUI transaction and can be found under that transaction in the Fiori library. It can be run directly from the app of that code or using the Scheduled Tax Jobs app F3690. The slide shows the summary at the end, but depending on the output selected, the report can also show the document number, tax code, net amount, tax amount and gross amount per document, as well as information about the supplier. Where a company has input and output tax, these are usually posted to separate accounts, and some companies use separate accounts for reverse charges or other types of posting. Although this may be more relevant for EU countries, I think it will still be useful to show a quick demonstration of this transaction. When I first opened the Fiori app, Create Advance Return on Sales and Purchase Taxes, the transaction S_ALR_87012357, the first screen shows the selection screen, and the parameters for the transaction run directly. The app and the scheduler have the same fields, but laid out slightly differently. In the app, you initially see all the selection buttons and expand them as required. I'm going to enter the company code and the posting date range, but you could choose other criteria. I'll open up the first button, Further Selections, which, as the name implies, gives options to restrict further, for example by tax code. I can enter one or a range of tax codes, or click the arrow on the right for more options, such as excluding any tax codes that are not relevant to the report, or listing several tax codes. I will enter X0 and Y0. I click on the clock to return to the main screen. I could also restrict by tax group, tax reporting date, GL account, etc. At the end of the period, the GL accounts, but not the tax totals themselves, can be cleared down to 0, transferring the balance to a tax control account, where adjustments can be made before making the final payment or request for repayment to the tax authorities. The Tax Payable Posting button, along with other posting parameters, allows me to enter a document or journal type and other criteria related to posting this journal. But I'll leave it blank as I'm just going to run the report. The next button to open is the Output Lists button. This allows you to select whether you want the details or just a summary printed for input or output tax, or just by company or all companies. I just want the detail of the output and input, plus one summary, so I deselect the other items. I'm going to select the tax different line items figure as well, as this is quite useful. I'll enter some different layouts that I've configured. To configure a layout, you click on the Configure button. If creating a new one, leave the layout field blank. To change the fields, click on what I usually call the Rubik cube icon. The items on the left show the columns that will appear in the report, along with their position and length, and those on the right are the ones that are available to add. To add a column, you simply select it and use the single arrow to move it from right to left. There are two buttons to the right of the Rubik cube icon. One to select a different layout to configure, the next to save the layout. Sometimes the icons might be under the More button. I've included the business partner name, in other words the customer or vendor name, and also the VAT registration number. But there's a bit of a quirk in that if I want the name to show, I have to tell the system to show the address data, which I'll show you shortly. Going back to the selection screen, although I've used a similar code for each layout, each one is configured separately. I'll now open the Output Control button and select the Read Address Data field so that I'll be able to see the customer or vendor name in the report. Now I can execute the report. I'll just make the screen slightly smaller. There's not a lot of data as it's a test sandbox, but the first set shows the line item details of documents with an output tax code. and the second shows the line item details of documents with an input tax code, summarised by tax code. The next section shows where the entered tax does not match the calculated tax. This only appears if you tick the tax difference box. Finally, we see the overall summary, with the total of all the tax codes and the amounts payable and deductible. The first two lines relate to a specific rule for purchases within the EU, where the tax code is added to the input and deducted from the output tax. Next are the output or sales totals, and finally the input totals. The first column is the net or base amount, then there's the tax payable and deductible columns, and the total tax in the last column. The very bottom line in the last column is the total amount to be paid over to or reclaimed from the tax authorities. Depending whether you have different GL accounts for each tax code, or perhaps just one for input and one for output, the relevant sections should match the relevant GL accounts. I find this layout helpful when checking if you have the correct tax code for the customer or country. For example, as the company code is in the UK, there should not have been VAT charged to the French company, nor should there be a reverse charge posting on a UK vendor. The next slide shows how to make a manual posting to the tax account, and the slides after show other apps that allow you to analyse the VAT postings. I like this app as you can clearly see the details of each tax code, the total by tax code, and the amount to be paid or to be deducted, and the balance. The slide shows a manual journal using app F1597, Post Tax Payable. As the name implies, it allows you to post the tax amounts. If you try to post directly to the actual tax accounts with a normal journal, you'll get an error message and will have to enter a tax code. If you continue the journal and enter a tax code, the VAT report itself will be updated and show a balance of 0. However, if you use the app specifically designed for posting the tax, you won't need to enter a tax code, and the GL account will be updated without affecting the VAT report balances. The journal in the slide credits the output tax, debits the input tax, and reposts the balance to the tax payable account. You can then make any manual adjustments and post the payment against the tax payable account, or transfer the amount to the vendor account for tax if you want to make an automatic payment. This slide shows the tax reconciliation account balance app F2095. This shows the line item detail of invoices posted with a tax code, as well as the percentage. It's perhaps useful if you want to check that the correct tax codes have been used for certain GL accounts. For example, insurance in most countries is exempt from tax. Utilities might have a lower tax rate code, and so on. As usual, there are many columns that you can add. This slide shows the GL account, document number, tax code information, and also how much tax has been entered compared to the amount calculated according to the percentage in the tax code, and the final column shows any difference. You can of course filter so that you only see items with the difference. Normally the difference might be rounding, but if it's large you may want to investigate, and you can drill down directly into the document from this screen, and also down to any related logistics documents. For some countries, the business place may also be relevant. The slide shows the tax declaration reconciliation at F2096. On the left-hand side, where applicable, are the numbered boxes for the tax declaration. The UK tax declaration, for example, has 9 numbered tax boxes in the declaration, some for the net or base amounts, some for the tax itself, some which will not show here as they are subtotals and totals which are automatically calculated in the declaration. For each box you can see the relevant items by tax code and you can drill down to the document details. Other countries have different boxes. In the UK, the tax declaration should be sent electronically, so you could use this report to double check the electronic declaration or if there was a query. There's also a column for differences, where the tax entered does not match the tax calculated by SAP, based on the percentage in the tax code. Again, you can filter by items in this column that are not equal to 0. I won't go into too much detail as tax varies quite a bit for each country. When you list the template section, you'll see a list of the various tax reports, including the one that I demonstrated earlier. App F3690, Schedule Tax Jobs, as the name implies, enables you to schedule a number of different tax-related reports, including some of those already covered in this tutorial. As usual with various apps for scheduling jobs, the first step is to create a task and then choose a template. In the slide you can see a list of the various templates available in the template drop-down. The EC sales list is a requirement in Europe, for example, and the generic withholding tax reporting covers a number of different local requirements. If you select the template for generic withholding tax reporting and choose process type, you'll see a number of different options in the drop-down, in addition to those shown in the slide for Belgium, Colombia and the UK. There are currently others such as the Italian Modello and withholding tax reports, the US 1042 and 1099 reports, but you may have a slightly different selection and more may be added in the future. Once the relevant postings have been completed, there'll be a number of reviews and reconciliations to be carried out. We've covered the GRIR reconciliation, but there'll be a number of other accounts that need to be checked to ensure that they come back to 0 or any differences can be reconciled to ensure they're genuine timing differences rather than forgotten errors. The special case for reconciliation is the bank clearing accounts, but there may be other control accounts, for example the payroll control. When the payroll is calculated, rather than posting every single entry by employee, which would make confidentiality difficult, the P&L entries tend to be posted in one journal with a balance to the control account and the actual payment as a summary posting between the bank and control account. The intercompany reconciliation is also important, and there's a number of apps that can help with that, but I won't go into the detail here. The bank reconciliation should effectively be the total of all bank accounts. The bank account itself should be identical to the statement balance from the bank, and the control account balances should represent any timing differences. You'll also want to do a general review or comparison of the trial balance to see if any accounts stand out because of unusual amounts, as well as the detailed review of the key accounts. The word reconciliation is an interesting word. To me, it doesn't just mean finding out how much of a difference you have between X and Y. It means finding out what's inside that amount and why it's there. 40 years ago, to do the bank reconciliation, I used to take the bank balance on the computer and compare it with the bank statement and work out what money had been paid in or paid out what had not yet appeared on the bank statement, as well as what items were on the bank statement and not yet posted to the computer. In the slide, thanks to the bank control accounts mentioned in section 6, the summary is done automatically by S/4HANA, but it doesn't mean that you can ignore the content of the control accounts. You still need to check that they consist only of short-term timing differences that should be there. Normally you'd get notification if a payment is returned for whatever reason. But if something is missed, for example not sent to or received at the bank, or an urgent manual payment was made without updating S/4HANA, there should be a balance on the control accounts. You should be able to clear all the matching items, just leaving open items without a matching posting. Using the control account in this way, the open items will help you identify any incorrect or missing postings and form the detail behind the bank reconciliation. Each quarter, most organisations tend to do slightly more detailed reporting than that carried out at a period end. Whilst there are no tasks specific to quarter end, many of the period end tasks may be carried out with greater accuracy. For example, more time allowed to post invoices or prepare accruals. Some organisations may prefer to only run certain tasks at a quarter end rather than periodically. For example, the revaluation of foreign currency. Historically, the carry forward of balances was run separately for GL asset accounting, accounts payable and receivables. Now there's just one transaction for the carry forward, although there's still a separate transaction to actually close the fixed asset year end when all the transactions have been completed. In most cases, you can already start to post transactions into the new year as soon as the period itself has been opened, although in some areas the closing balances will not be correct until the opening balances have been carried forward. Asset accounting is different because many of the reports will no longer work once the new year has started until the balances from the previous year have been carried forward. Historically, it wasn't so urgent to run the carry forward for accounts payable and receivable or for the general ledger, as the asset account carry forward could be run on its own. But now, with everything in the one transaction, it's best to run the carry forward fairly soon after the new year's opened. Depending on local legislation or preference, some number ranges may continue across the year end, whereas some restart from scratch. Some companies set up number ranges and so on annually, and others for several years in advance, but it's worth checking beforehand so that you don't suddenly find that no postings can be made in the new year because of missing number ranges. There are also some configuration settings to check, for example for the controlling, actual and planning versions to allow postings to the new year. There may be other controlling tasks to be carried out, such as the carry forward of commitments, which may affect, for example, availability control in purchasing and prevent the posting of invoices. As part of the year-end closing, all the period and quarter-end tasks will anyway need to be run, usually in greater detail than for a normal period. There'll also probably be more tidying up than is done at a normal period end to leave the year-end status of the accounts as clean as possible for the auditors. The organisation may look more closely into areas such as accruals and provisions in order to have the most accurate position at the year end. There are, of course, a number of other tasks that need to be carried out outside of finance. For example, balance confirmation letters to be sent out to customers and vendors, asking them to confirm the amounts owing to and from the organisation. There are various controlling and material ledger tasks that have to be coordinated with the financial close, such as carrying forward commitments, calculating work in progress, cost estimates and other product-related tasks and settlements. Carry Forward Balances app F1596 allows you to select one or more company codes and ledgers to carry forward. There are 3 tabs at the top: To Do tab for the items that have not been commenced, the Preview tab for the items that have been started and need to be reviewed, and the Done tab for all the carry forwards that have been completed. Once you select the relevant company codes and ledgers and click on the Carry Forward button, those items will appear in the Preview tab with the detailed information about the carry forward, which you can review, and the statuses, along with any messages. In this slide, you can see that in this example, there's a green successful message. If you're happy with the results, you can then just select the item and click on Run Changes. Sometimes you might get other messages, for example a red error if the previous fiscal year was not closed properly in asset accounting, as you cannot have more than 2 years open in asset accounting. You can regenerate the carry forward once you've fixed an error. If you want to preview the results for a particular ledger or company code combination prior to clicking on Run Changes, you can click anywhere on the line item or on the arrow on the right to see the detail of what's being carried forward. The slide shows a preview of the balance sheet accounts, and there's also a tab for the profit and loss accounts. If you're happy with the results, you can click on Run Changes. This moves it from the Preview tab to the Done tab. You can still display the results screen after you've completed the carry forward by clicking on the relevant item in the Done tab. Note that this does not close the previous year, it just carries forward the balances to the new year. You can still post to the previous year, and you don't have to keep running the carry forward each time you post a new item. They'll automatically be included in the carry forward totals. In the slide at the top left, you can see there have been 3 postings to Ledger 2L after the carry forward, and in the bottom left, if I click on that line, I can see the total value of the carry forward, including those 3 postings. I also ran the GL account balances app F0707, both before and after doing the postings, and all 3 were included in the final carry forward balance shown at the top right of the slide, even though I didn't rerun the carry forward. The reason that the carry forward updates automatically with later postings is because the carry forward doesn't create a journal posting or document as such to do the carry forward. They only update tables in the background. So if you try to look at the line item display of the retained earnings account, in this case 33000, you won't see any actual documents. Some organisations just leave the account to accumulate, but the balances can be transferred to more appropriate accounts if preferred with a journal once the final retained earnings have been approved in the accounts. S/4HANA allows you to set up standard periods and special periods. Special periods occur at the end of the year for audit adjustments and are generally restricted to finance, so they wouldn't appear, for example, for a normal depreciation run. Normally, if you enter any posting date other than a date in the last period of the year, the system will overwrite the period to match back to the posting date. So if you want to post a special period, you'd normally enter the year-end date, but other dates from the last period of the year work as well. In the slide, the fiscal year end is the 31st of December, and there are 12 standard periods and 4 special periods. Here we're posting to period 13. Historically, to get any detailed analytics, you usually had to transfer the data to a separate system. But in S/4HANA, with the new structure and the powerful HANA database, it's possible to use embedded analytics to get more detailed information than was possible in ECC6 and earlier SAP versions. This section covers many of the new Fiori reporting capabilities. After a quick glance at some of the finance reports in general, I'll be going through the different types of reports available in finance. We've covered many of the list reports already, so this is really just a reminder of the functionality available. I cover the audit journal separately as there's some interesting functionality there. Then I'll give an overview of embedded analytics, and starting with the trial balance, I'll go into the various different types of multi-dimensional reports that are available. I'll explain what query browsers and view browsers are, and we'll briefly cover custom analytical reports, and then in the tips and tricks I'll show you how to add custom fields and manage date functions. The screen shows some examples of the different types of report available in SAP S/4HANA. Charts, KPIs and some of the smart drill downs are more relevant, for example, to accounts payable and receivable rather than the general ledger. But I wanted to give you an idea of what's available in finance as a whole. The reports for the general ledger are a little less exciting to look at, but are nevertheless quite powerful. The main three in the general ledger are the overview page, list reports and multidimensional reports. There are over 50 different overview apps that work in a similar way. Some examples in finance are accounts payable and receivable, asset accounting, foreign exchange, projects, bank relationships, GRIR, and so on, as well as many in other areas such as order to cash, procurement, inventory, cash management, etc. The General Ledger Overview app in this slide is less colourful to look at than some of the other apps as it has fewer graphs and KPIs, but it's a good starting point in the General Ledger. It's perhaps not a report as such, more like a dashboard, but it contains links to many areas as well as to reports. In many cases, you can drill down to more detail. With a My Inbox tile, for example, clicking on an item opens it in the My Inbox app. You can size and rearrange the tiles how you want by dragging and dropping. I'm just going to do a quick demo of the General Ledger Overview app. To populate the dashboard, you have to first enter a display currency, key date, planning category, statement version, ledger and company code. I can go to Manage Tiles and add or remove them. As you can see, I can drag and drop tiles or resize them. I can drill down, for example, on the days payable outstanding. Some of the apps have a drop-down box at the top, so you can change what's displayed in the dashboard. For example, only showing high priority items in my inbox, or changing the date to show journal entries to be verified. Once I have the dashboard arranged how I want it, I can save it in the layouts at the top left. GL item changes takes you into a list of all the changes if you click on the heading, or it takes you into the changes for the document if you click on the journal number. You can select other reports via the Quick Links tile, for example the line item display and the Manage Journal Entries reports, as well as other apps, such as the Post Journal Entries app or Clear GL accounts. And you can go to your inbox directly to see if anything needs to be released or approved. You can drill down to the multidimensional balance sheet and income statement from the account balances based on the financial statement version entered in the filter. I'll explain shortly what is meant by multidimensional. The next simplest type of report is the list report, essentially a table with the option to add and remove columns and a filter bar at the top which you can also adjust. We've already seen a few examples in the previous sections. If you've ever run reports using the classic GUI transactions in SAP, such as the various line item displays, you're probably familiar with using the Rubik Cube-like functionality to create the layout you want by adding columns, sorting, filtering, etc. The Fiori list report apps are probably the closest to this sort of functionality. Sometimes the table is essentially a report that you can display, and sometimes you can maintain the displayed data as well as report on it. For example, in the Manage Journal Entries app F0717, you can select one or more items and reverse them or drill down into them and edit them. With many of the Manage Master Data apps, you can also copy or create and sometimes perform mass changes. As with most apps, it's also easy to export the data to Excel. We've already covered a number of these types of reports and their functionality in the relevant section, but it's worth quickly going over again as some of the functionality in the list reports is available in other reports as well. In most of the list reports, you can rearrange the columns, sort, filter, and in some apps you can also group items in a tree or hierarchy format, etc. In the app F2218 Display Line Item Entry, in the slide, documents are grouped by company code, then GL account, and then document or journal entry type. In this app, the actual line items are shown, in other words the original entry, as opposed to the general ledger view in app F2217, which includes document splitting. In some cases you can rearrange the columns by dragging and dropping, or clicking at the top to sort and filter. But in most cases you also have the settings button where a lot of the rearranging can also be done. While on the subject of line item display, many end users prefer to drill down into the line item display by displaying the GL account balances app F0707 first, and then drilling down into the whole account, or just one period as required. Note that in this case, the app drilled down to is display line items in general ledger app F2217, rather than the app shown in the previous slide. F2217 contains the general ledger view of the line items, in other words including document splitting, whereas F2218 shows the entry view of the transactions. This slide shows the display line items in General Ledger app F2217, which behaves in a similar way to the display line item entries in the entry view. And of course, from either line item report as well as many other apps, clicking on the blue document will give you a number of options, either to drill down to the document itself, or to see the document in tier count format, or to display the document flow around the document. The slide shows the display document flow app F3665 for the document highlighted in the previous slide, which is a goods receipt. The top part of the screen shows the operational document flow, in other words the MM or logistics documents, in this case the purchase order, goods receipt and logistics invoice, and the lower part of the screen shows the corresponding parts that have been posted to the general ledger. In this particular case, the first document in the GL document flow area, from left to right, is the financial posting of the goods receipt. The next document is the posting of the invoice. The next is where the GRIR goods receipt was cleared against the invoice receipt in the GRIR clearing. And the final document is where the invoice was paid. In each case, when you click on an item, a little icon will appear to the right so that you can drill down to the details of that item. I'm now going to demonstrate the Audit Journal app F0997, the app shown in the slide. Technically, it probably could come under closing, but as it's more of a report than a transaction and can be run at any time, I decided to include it in the reporting section. First of all, I select the company code, year and ledger as a minimum, but I could restrict further if I wanted to. On the Compact Journal tab, the journals are pre-grouped by period and then summarised by journal type, although I could change the grouping. You can see debits and credits by GL account, customer and vendor. On the Journal tab, they're grouped by posting date, and then the journal lines are listed, showing things like who they are created by, the type, posting key, and debit and credit amounts. The posting key indicates the type of posting. Normally 40 is a debit to the general ledger, and 50 a credit to the general ledger. And the range of posting keys 1 to 19 is used for customers, 20 to 39 for vendors, 70 and 75 are fixed assets, and 80 to 99 are stock movements. Clicking in a blue document allows me to drill down into the journal itself. Note that if I click again on the blue number, I go to the line item and have to select journal entry at the bottom right to see the whole document. Clicking on Display Document Changes allows me to see any changes to the documents. If I want to filter, I can either filter before I move to the Changes screen or use the Settings button, as there's no filter bar in this screen. And I can also change columns and sort using the Settings button. If I go back one screen, the next thing I can do is check for duplicate invoices. I'm going to switch to the year 2020 for this, as I don't think I have any duplicates in 2021. The default on this screen is the grouping by reference field, which is normally the invoice number field, and as it's a sandbox, I'm afraid I tend to use similar references a lot. The logic is slightly different to the GUI transaction, where only invoices with similar amounts are shown. And here you can have duplicate invoices with different dates, but it does include logistics and finance invoices when doing the comparison. Finally, if I go back on screen, I can check to make sure there are no gaps in the journal entry numbering. In theory, there should not be any, unless you have any part documents which show as not posted. Being a sandbox, however, anything is possible, and I suspect that either some configuration or the number range was changed, causing the larger gap. There's a greyed out button at the bottom if there are any update terminations. In other words, the posting was terminated for some reason. As usual, all the reports can be exported to Excel. Embedded analytics is an important concept in S/4HANA. Because of the power of the HANA database, more can be done real-time in the transactional system without having to wait overnight for a transfer to a data warehouse or other operating system. Of course, you may still have other systems for reporting, especially if you have to report from other non-S/4HANA systems, and SAP also offers SAP Analytics Cloud for strategic reporting purposes. But everything I will cover in this section will be run directly from the S/4HANA system, using the same user interface, in other words Fiori. S/4HANA Analytics, especially the multidimensional reports, are very flexible, and in many cases you can drill down into further detail, or jump to a transaction or other app, create variants and make your own reports. To do this, S/4HANA uses the concept of virtual data models based on CDS views of transactional and master data tables generated in real time to feed the analytical apps. We'll come back to CDS views later. If you've worked with BI or BW, you may be familiar with info cubes, which are structures built to contain cleansed and aggregated data in an optimal way in a separate data warehouse for reporting. Unlike those info cubes which contain static data, the CDS views are virtual views of the live data directly in the system and are recalculated as required. They store the way to access the data, not the data itself. You don't have to be a data analysis expert to use the standard apps, which are designed to be used by end users and key users. You just need the relevant roles, and although you might need a little bit more experience or expertise, even extending or creating new reports can be done with standard Fiori apps. One of my favourite types of report is the multidimensional app. The slide shows some examples with their Fiori app IDs. In many cases, you will see two IDs, one for the so-called accessible versions and one for the Design Studios version. Generally, the one with the suffix A is the Design Studio version. There are also a lot of other reports such as cost centres, profit centres and internal order actuals, which you might also want to run while looking at the general ledger, although they're technically controlling reports. Most of the controlling reports, as you can see, have options for actual versus different plan versions, as well as year-to-date and different currencies. The trial balance is probably one of the most important reports for an accountant, as it gives a list of GL account balances so you can see at a rough glance the approximate value of key figures. In S/4HANA, the trial balance is set up as a multi-dimensional report, meaning that in addition to the GL account balances, you can pull in so much more information into the trial balance. The next few slides will show some trial balance examples, and then I'll do a demo of the functionality.